In today's market report episode with Samantha Cozza-Wright, we are breaking down everything in the U.S. cattle markets that we are seeing this week. It's a very volatile time out there, and Samantha is breaking everything down from what we are seeing on the board to what we are also seeing in the live cattle market. We touch on a little bit of everything today and bringing in a lot of current events, some speculated insider trading that we may be seeing in the industry, and then we're also touching on what we can anticipate and expect for the rest of 2025 and as we go into 2026. Without further ado, let's go ahead and hear from Samantha. But before we do, if you guys could take a second, if you're watching on YouTube, make sure that you subscribe to our show and that you like this episode. If you're watching on any of our other podcasting platforms, make sure that you take a second to go rate and review this episode and also go follow our show. Without further ado, let's hear from Samantha. Samantha, welcome back to the podcast. How are you? How was your Thanksgiving? How was life in Northwest Kansas, North Central Kansas, whatever you consider where you
It's
live?
good. You're starting to get right into winter. We had a light dusting of snow on Monday. Temps are dropping, so getting pretty cold. I saw that you guys had some snow in Manhattan, maybe over the weekend.
Yeah, quite a bit of snow. It at least waited until December 1st to really stick to the ground. It did snow this weekend, but then it waited until Monday to actually accumulate, which was perfect timing. I'm like, you know what? It's December. I can be okay with this. I can be okay with some snow accumulating, but I tell you what, it is slicker than shit out there right now. It is just an ice skating rink. I had spin class this morning at 6 a.m. bright and early, and we went to it, and I was like, I feel like a grandma driving on these roads right now because I don't think the city of Manhattan was ready for this snow.
Yeah,
But
I would rather
yes.
drive in anything but ice. That is the worst.
Oh, I agree with that tenfold. But winter is here. It is here in full force. I don't care when it starts. I don't think we're ever fully ready for it. As producers, I am not ready for the phone calls back from the ranch saying like, "Hey, we need your help calving," or things like that. But it's the joys of it. So
Yeah, I didn't realize
yeah.
how late into the year we were until we prey checked, and our cows were 7 months along, and it's like, holy crap, calving season's going to be here in 2 months. Not ready for it.
Literally before we know it. Before we know it. You're going to have a newborn, and you know what? When you get up for evening feedings to feed your baby, your husband can get up at the same time and go do
Go
evening
check
calf
cattle.
checks.
Yeah, yeah.
Like, hey, we're both just not going to get any sleep right now. Schedules, what's that?
Exactly.
Geez. Well, what is going on with the markets this week? We've had kind of a all over the place week, but what are your thoughts on what we're seeing right now?
A lot of volatility. That seems to be a very popular word in the cattle industry these days, but I think it speaks a lot of volumes, for lack of better terms. In a week's time, more so just 4 days because we had that Thanksgiving holiday off. We went from being limit down on Monday to, up $19 a hundredweight on January feeder cattle. So your Friday and your Saturday sales, if you were able to catch them in the auction barns last week, definitely caught the positive end of that market. Cash was really strong, especially in the north. In some spots, we were even back up to those October highs. So that was very positive, a very positive way to end the holiday week there. And then with nothing but a weekend in between, already closed lower at the start of this week. That kind of just brings me back to the level of uncertainty on the board that has us all in that fight or flight sort of mindset. In other market news, I do believe there's been some insider trading. So I think that's at play to a certain degree, and that just amplifies these moves even more and adds a lot of uncertainty around every corner, especially when we've seen cases of managed money pull out, in the past few months without any really clear explanation as to why. And then all of a sudden you see a news release a day or two later that sort of clears things up. So just to add, a little bit of speculation, but I do think that's at play. So that's kind of what we're seeing there. And it's one thing to be on the outside looking in, but when you've got actual skin in the game, it hits a lot harder. And for people that don't live it, I'm sure a lot of these people that are watching do, but for people that don't, I mean, seriously, imagine riding your livelihood on markets that are totally out of your control. So another thing to keep in mind, if just a few social media comments and a Washington narrative that beef's too high can send things into a spiral. It increases the concern for what real physical shifts can do. And those physical shifts that I'm referring to right now anyway, being the beef plant closure in the north. And what's kind of been overlooked by that beef plant closure also is the major cut to a single shift facility in Amarillo, Tyson's Amarillo plant. Suddenly slaughter capacity gets a lot tighter. When you combine this with live cattle trade soon to be reintroduced from the South and Brazilian beef imports coming in, I could see this putting some heat on the market, giving a lot of leverage to the packers. Less room to kill cattle and cheaper product coming in definitely works in favor of your packer margins and your corporate feeders, but it doesn't do a lot of good for your producer or lower the price of beef at the retail counter. So, in fact, it does the opposite. We've already seen live cattle take a hit. The weighted average price on the negotiated fed cattle trade out of your 5-area feeding region there ended the week at 209.78. That's 709 a hundredweight lower for the week on your weighted average. So some higher trade late in the week, but not enough volume to pull up that weighted average. I think if we're able to get the fats cleaned up in the north, especially as this colder weather starts to set in, I think that'll also help, but there's not been a lot of volume traded at the negotiated levels. So I'd like to see that pick up at some point. But I think we still potentially see fundamentals drive a bullish market, or at least help us find sort of a temporary bottom through the holiday season. As far as futures go, Dan made a really good point in his market commentary yesterday. And he said, managed money doesn't have to trade the fundamentals. So that puts some more bears in the bullpen. On a positive note, like I said, cash is good. There's a lot of high demand right now for placements and feeder stock in the market. So I think as we get into year end, cash will carry us through.
Yeah, absolutely. There's a lot going on with the markets right now. And I think the biggest thing is like we are seeing so much pressure from Washington and so much pressure from the media to drop these prices of beef. And you said it so perfectly that everything that is happening right now is going to have the opposite effect. Like we are seeing so much pressure be put on these markets from different outside factors. And it's crazy right now. And it does truly make you feel it a lot more when you've got that skin in the game, because you're sitting here saying, okay, like my entire livelihood is based on what social media is saying today, what Washington decides to put a report out on, what the futures markets decide to do, and people that live in a high rise in the middle of a major metropolitan area decide to do on trading this day. It's so just up to the odds, and it puts a lot of pressure on us as producers to sit and live that. I'd love to hear I know it's all speculation, but some more thoughts on the insider trading thing that you're kind of speculating on right now, Samantha.
I've been seeing, and specifically going back to the tariff news that was released when we removed that 40% Brazilian beef tariff, we saw the markets actually they were limit down on the Wednesday prior to the actual news release on Friday. So I think that had a lot to do with insider trading. As we move into the more recent news of the Packer plant closures, you see a lot of market analysts in the news. You see a lot of different speculators come out and say, "Oh yeah, it was leaked." Really? Okay, well that's insider trading. Think of all these people that put hedges on when this news leaked and then cashed out when the market fell, and they gained a lot of money from that. So, like I said, it's all speculation, but I definitely think that it's something that comes into play. And like I said, when we see these more drastic moves one way or the other, it puts that into perspective, and you're thinking, okay, what news is around the corner that's fueling this? And how deep is it going to go?
Yeah, absolutely. I think that that's a question that so many producers have on their mind these days, especially with the volatility that we have been seeing in the market over the past few weeks. We come on every single week, you and I, and sometimes Dan, have the same discussion of what hit the news cycle this week, like what's making the market go up or down this week. And I mean, that's just the markets in general, like out any commodity. That is what it is. It's kind of the name of the game, but I feel like it is accentuated at a much higher level right now with how much outside pressure we are seeing on the cattle industry and just on the markets in general, and how much people are feeling that as we're going into the month of December. What are kind of your thoughts as we go into the holiday season and as we kind of prepare to round out the rest of 2025?
I really think holiday demand is going to drive us through the end of the year. Like I said, there's a high demand for replacements and feeders right now. Feedlots need the placements. We're getting into the end of the year and looking at, the end of a tax year as well. So I think people, especially in this industry, producers, what have you, would rather have that money invested than hand it over to the government on a silver platter. So like I said, I really think that we're going to see cash drive us through the end of the year. As we get into the first of the year, I think that's when we're really going to start to see the hits of, like I said, these just different aspects in the industry, whether it be the Tyson plant closure in Lexington, whether it be the shift cutbacks in Amarillo, whether it be the tariff news, the South border opening. I think that's really where we're going to see the effects of that really come into play instead of just the speculation of it. So I think the first of the year is going to become more volatile than even what we're seeing now. And like I said, that could really shift in any direction. I think the fundamentals are still leading us. But like I said earlier, and like Dan said in his market commentary, people don't have to trade based off fundamentals. So that's something that you also have to take into consideration.
Yeah, absolutely. We're definitely seeing a very emotional and kind of trigger happy trading scene right now, and just what the most recent news story is. And going back to what you said earlier, we are going to start seeing those physical aspects of pressure on the market going into the new year and going into the rest of this year rather than just the speculation of it. Like right now, we have been seeing a bunch of volatility based on news reports of the southern border opening, news reports of Brazilian beef being imported, news reports of shift closures or like Tyson being closed down. We haven't quite felt that in the market yet because that's still new, right? And so everything else that is going to continue to happen in the beginning of 2026, we're definitely going to be seeing more of that actual physical push on the market rather than just the emotional news chasing push of market demand, which will be really interesting to see. Hopefully we can make it through calving season and get to spring processing and people are able to see a little bit of recovery by then and not get hit in the same way we did this fall.
Right. And then you also factor in, maybe also the uncertainty that's hanging over the market of these things happening has more of effect than the actual physical, moves. So like I said, it could go either way. I think as we look into further into 2026, we look at, the regrowth of our domestic herd. And just to throw these numbers out there, I was looking at some numbers over the weekend and we were talking a little bit about heifer retention in last week's podcast. And I did see that the heifer to steer ratio in our placements is about 38%. So really, we want to be at that 34% level to really see and signal that we are retaining heifers. I think we are to some extent, but not to the measures that we need to be to start seeing herd regrowth. So could we see more imports replace that domestic demand? That's something we could also see. So like I said, it'll be very interesting as we move into the first of the year.
Yeah, absolutely. Going back to that heifer retention conversation that we had last week, it's definitely one of those things that you look at it and you're like, we would love for people to be retaining heifers at a rate that we are able to produce what we need to supply that domestic demand. But at the same time, you look at the markets and you look at every single area that producers have been absolutely getting backhanded in the past 6 months to a year when those decisions have been being made. Like those decisions got made this fall. And you looked at the markets and it's hard to validate when our input costs are so high to sit there and say, yeah, I can afford to keep this heifer right now and feed her for 2 years before she actually produces anything for me.
Right.
It's a really difficult scene for a lot of producers out there. And I know so many people are on both sides of the fence. Some people have been like, I'm just biting the bullet right now. I'm going to go get another operating loan. It'll be okay in a couple years. And then there are some people that are like, no, those girls are going to the sale barn and I'm going to buy 2-year-olds that are bred and get that immediate return. I've been seeing both ends of the coin there, and it's very interesting to see how producers in different regions, different areas have been making those decisions for their operations as we move forward.
Yeah, that's exactly right. And if there was that certainty in the market as we move further into the year, I think more people would be retaining efforts. But when you have this level of volatility, it doesn't give you a lot of certainty to be able to follow through with that. I mean, at the end of the day, you got to look out for yourself and your livelihood. And like you said, when you have all these high input costs factoring in, and you've had Washington and the media coming into it and wrecking your markets, $80 a hundredweight on feeder cattle, it makes things tough.
Yeah, it absolutely does. It really makes it difficult to be a producer that is back home at the end of the day, relying on what the media is saying. And going back to what we've talked about at the beginning of this, the fact that there is so much out of our control in these markets, and it makes it really difficult sometimes to be a cattle producer because of those aspects. But I know that there is a lot of hope going into the new year that we're able to start seeing some more stability in the markets. Going back to what you just said, Samantha, too, of the fact that, like, that's my hope for the new year. Like, some predictability, not, it's only so predictable, right? Like, we're dealing with a commodity at the end of the day, but at least a little bit of that stability for these producers as we go into the spring and as we get ready to make those decisions again with our spring calvers of what we're going to be doing there and the decisions that are going to be made going forward for our cattle industry.
Right. I
Yeah.
completely agree.
Absolutely. Absolutely. Any other closing thoughts as we round out the podcast today, Samantha, on anything else market related, anything else that we kind of missed today?
I don't think so.
Wonderful. Awesome. Awesome. Well, thank you so much for your thoughts, your insight, everything like that. To all of our listeners out there, it is a very volatile time in the cattle industry right now. If you are looking to get coverage on anything, look into LRPs, anything like that, make sure you head down to the show notes down below. You can get a hold of Samantha or another team member from our Cattle USA insurance team to discuss your options for you and your operation. Every single cattle business is completely different, and it is always great to just get on the phone with someone and hear what can work for you in your operation and just hear from someone from our team. So if you are interested in any of that, check out the show notes below and you can get in contact with our team to do that. Samantha, thank you for your time. And to all of our listeners, we will see you next time on another episode of the Cattle USA Daily Podcast. Have a good one, y'all.